Good morning, everyone, and welcome back to Nadex Morning Analysis. It is Tuesday, September 7th.
You were to think about that.
I had to think, like, what is today? This is what happens after you take Monday off for Labor Day. Hope everyone enjoyed the holiday. Uh, I am Todd Rich with Nadex. With me from Keep Trading Simple is Brian Caprice. We are going to look at hot spots in the markets. You know, I'm going to have to get used to it because we call this Nadex Morning Analysis, soon to be Morning Market Movers. So
Yep, totally different. Completely different guys, different dresses, everything. No, just kidding.
Same guys, same topics, new name.
Mhm.
Yeah, get ready for that one. Before Brian and I jump into what is moving this morning, we do need to share this disclaimer that trading involves risk. It may not be appropriate for everyone. That any trading decisions you make are solely your responsibility and at your own risk. And this is an educational session. Please do not construe anything Brian or I say as a buy or sell recommendation. We are doing this for your educational purposes. So what are we looking at today? And I think what we're going to do this morning, there are three things that are moving right now. We're going to cover them, look at some setups, look at the charts just because things are moving around. And then we're going to encourage everyone to come back in 3 hours for the full-blown. This is Tuesday, and every Tuesday there's a full-blown hour-long analysis midday of what's going on in the markets today, that day, as well as what's going to be coming up all week. Today, we are going to be looking at this, the euro pound. It's already making some moves, some economic news out of Europe, as well as some words from the Bank of England. We're getting some movement in the euro pound. We're getting actually quite a bit of movement out of the euro pound. The other things that are moving around this morning are the commodities. Oil and gold both making some pretty big moves. So these are the hot spots this morning to start. Equities are all looking kind of flat to open. So we're waiting to see what happens. But for now, Brian, let's go ahead and take a look at what's going on with the euro, pound, oil, and then gold.
Yeah, so I mean, it's always strange when we have a Monday holiday, particularly back in September. It's like kind of I mean, with kids going back, and there's a lot of things kind of rotating through right now. There wasn't any kind of major economic announcements. There was a couple in orange, and we see that the economic sentiment out of the European Union is much lower than expected. They expected 35.3 and 30. It came in at 31 and 26, so much lower. Kind of seems to be the economic trend, kind of what we see for consumer sentiment here. Economic sentiment is slightly different over there, but again, everything's kind of rolling back into that negative side of things. The RBA rate statement last night was not supposed to change. It didn't change. And again, you're seeing some movement in the Aussie dollar as well. But right now, it's strange. The biggest mover right now, you would look at this and say, oh, look at the dollar CAD and be like, oh, look, the dollar must be strong. But not so much. I mean, I would say there's a little bit of dollar strength out there, which again, if you consider this the Monday morning, that's what we've kind of seen. Pound is really the one that has taken it the biggest. And I would say that the biggest mover right now would be, as far as percentage-wise, based off its daily ATR, would be the euro pound. You can see the pound dollar is down basically 60. It's down 58. The euro pound is up, meaning it's European strength, which again, we don't really see European strength anywhere else. And then pound weakness, it's up 32 in the last 24 hours. Now, you may say that 32 isn't that much, but the daily ATR is only 32, and it was actually up a little bit more than that just a bit ago. So I think jumping into that one is important. So what I've done here is
that ATR move. That's a lot.
Yeah, so just in the European session, not even versus yesterday, you can see we're farther down yesterday, but just in the European session, it was a 35 pip move total. As I mentioned, the daily ATR, and again, the reason I use the daily ATR for a lot of things is to figure out what the average mover is. Is today a wild day, or is it not necessarily as crazy as it looks? And when you move in one European session, the amount of movement greater than one ATR, that means there's really a lot of movement. That's kind of what's hot out in the market. Now, it is starting to retrace, and there was a level here, and we had taken that trade off of 86 last week, and it hit it a few times and went to full profit and kind of rallied back up again. It's now kind of stalled up top and is now pulling back. And really, the only news we got was out of the BOE from Saunders. And he's talking about that the level of GDP is now probably fairly close to pre-pandemic levels. Kind of interesting. We keep hearing from the United States that maybe next year we'll be back up to it. A couple other countries have mentioned it. New Zealand says, yeah, we're already there. I mean, we figured out if we close, they're going to buy it later anyway, so it's basically there. other headlines in here about CPI is 4%. Talking about we need to ease off the accelerator rather than apply the brakes. I believe what he's trying, and again, remember, we have to translate everything from UK English to American English. I believe what he's saying is tapering, right? Because tapering is not putting the brakes on. Putting the brakes on is raising interest rates. I think taking your foot off the accelerator, and again, this is that translation, right? Biscuit, crumpet, whatever, the difference there. The accelerator,
Yeah.
I think what he's saying is, yeah, we should probably start tapering, just not applying the brakes and raising. It says, if bank rate does rise in the next year or so, would be relatively limited. Basically saying, yeah, we'll put it up a little bit. And again, remember, the UK is coming out of the true Brexit kind of break, so they were much farther down than everybody else. But yeah, so right now, again, you're already starting to see kind of retrace again. I wouldn't be surprised if it pushes back lower. Saying that they're at pre-pandemic levels is always a good thing. And again, we've kind of had a little bit of a top in there. I'm afraid this is all the profit taking from the European session, but I would say look for price to potentially come back down to probably sitting in this level. And again, that would be bringing it back into the 85.66-ish range. It's about 44 pips to the downside, so not necessarily horrible. And as I said, it's already starting to run back down with the profit taking. So, seeing this one move, one way that we can, play this is to jump over and say, okay, listen, if the pound is finally getting its strength back again from being weak, that means this morning, if we're looking to play that strong dollar, which we kind of have seen, you would want to go over and play it versus the euro and not the pound. And if you're playing weak dollar, then you want to play it more against the pound because the pound is really starting to pick up strength in this kind of pair. And, looking at the dollar index, you can see that the dollar index is basically really since last night, but here's where the European Open happened right here. You can see it's been one direction. And we know what happens when we have one direction in the dollar index
Eventually.
in the UK session. It tends to turn and roll back down again. So if we're seeing pound strength right now starting to roll in and we're seeing this dollar strength all night long, because remember, what we've been seeing for Monday mornings is coming in very, very weak. And then the US trader comes on and it's very, very strong dollar. Now it's been strong since really yesterday morning. Now we'll see if there's that reversal. And if it does happen, that's where the pound dollar comes in. If it, again, continues to go high, again, that's where you look at and look to start getting, fine shorts in the euro dollar as it starts losing ground against the pound. So kind of interesting.
Let's take a look at the one. I was gonna say oil and gold are where things are really moving around.
Yeah, I mean, it's had a pretty decent session so far. We can mark the candle off right there. This is not a horrible drop. I mean, again, it is a Tuesday. It's $1.50 down. The daily ATR on oil is about $2.15. But again, as we've seen with a lot of the drawings that we've done here, just on a simple form, is you can. I think wholeheartedly we can say in the European session it is a down. Okay. And again, back down in that, we got as low as what, 67.60. So I'm cool with that as long as natural gas follows it down like by half, as I mentioned last week. But again, it is kind of setting up, and we do know that we have levels down here, and we had that reversal. Again, this was from news, so let me just remove that off. We do have a level coming in down here at 67. So, the question is, can we stabilize right here? And it's very hard to see. Let me pull that Nadex position off. With current price here, there's not a whole lot. I mean, there's some smaller kind of candles in here whipping back and forth, but no real solid levels. So this would be a pure European session profit taking turn here that brings us higher. I would say, it's a decent level of basing up top here, but it's one that I think we need to mark off. If price is able to rally, or if you're going to start getting long this position for the U.S. session, 68.95 is probably something to kind of shoot for. And even again, it's so close, it even may be up to that 69 figure. And I wouldn't be surprised with that coming back up again for the day. Again, kind of a surprising push down.
Actually,
a lot of this probably had to do with this.
That 68.95 level, and just because I just quickly dropped it on here, I just dropped on the Fibonacci retracements from the moves from Wednesday of last week and Thursday of last week when things were kind of busy. That 68.95 actually is it's right there at it's the 61.8 fib level where you would see some type of resistance. So yeah, I mean, if it were to come back up, that's probably where you would see it meet some resistance. And again, I would tend to agree with you. I mean, I think this is profit taking right now, and we'll have to see what the U.S. trader thinks when they come in, because the U.S. trader really wasn't even online yesterday.
No, not until this morning. Yeah.
Right.
No, they weren't here.
So I mean, the U.S. traders saw it. Oil was above 70, and here we are,
Hmm.
a couple of bucks lower. It'll be
Hmm.
interesting to see what the retail folks here have to say when they get a
Yeah.
look at this.
And again, there's not really any big news for today. Yeah, I just wanted
Yep.
to double check everything. There's not really any major news events today, so again, it will be kind of a slow start for things. And again, the only news we have is again the economic sentiment going lower, which again drives demand down. So the move kind of makes sense, but is it really driven behind any type of major news or major money? No, not yet.
No.
So
No.
I would say looking for a retracement back up to 69 would not surprise me at all today. And again, all they need to do is talk about another hurricane hitting the north or hitting hitting something that should kind of drive it a bit.
Talking about the next hurricanes that are lining up in
Mm-hmm.
the Gulf. So
Yep.
interesting. All right, let's before we wrap it, let's just take one quick peek over at gold, and then
Mm-hmm.
we'll encourage everyone to come back and I'll grab the link real quickly for the full blown
Yeah.
session in 3 hours.
Yeah, so gold took a little Harry Potter trade. You can see that we ended up pushing through that prior level. We had that level up at 1819 that got really kind of exploded last week with some of the news and then kind of pulled back through. But then it really put up a lot of kind of like resistance right here. You can see that all these little tiny bodies, all these ways, I mean, it just ground super slow and then opened up. And then what it did is it came through, it grabbed that old area of interest here, popped up, grabbed it, and that was its force at the UK Open. So it was a UK Open session short. Right now, again, it's really pulling back down. We mentioned last week, looking at the candles and the way this looks, I mean, we have a one little area here at 1803 and then another one at 118.75 cents. So I'd say right now, with the economic sentiment down, the BOE making comments about, yeah, maybe we'll start raising stuff next year. It's not really that big of an issue for us yet. None of those are positive kind of, and again, he did mention CPI right here. I worry that continuing asset purchases when CPI is 4% might cause, inflation expectations to drift higher, right? Okay. 4% seems really, really high, right? We're talking about 2% as being the mandate, and 4% seems high in their back. So, yeah, I think the biggest dragger is going to be that economic sentiment. When things are looking negative, you tend not to see that type of inflation. And again, we should start seeing with gold. I'm sorry, with oil being down. Again, being demand driven, the gold traders are looking at that saying, wait, oil's down too. Wait, there's not as much demand for oil. Okay. Inflation. Yeah. So
right.
Yeah.
Right. So
I would say again, don't be surprised if we tag 1800. We are talking about it last week, and we talked about how 1800 is really kind of the median point, and we were basing in the same level, this 1810 to 1815 range for a long time last week. You can see this yellow area. It spent so much time inside that yellow box, just minor peaks out. We had the nice spike up, and it blew through the one level, grabbed their upper level, and then we're right back in the same area. So. Bottom side of this channel is going to be down at that 1800 mark. So just watch out for that one. And silver, again, silver's moved about twice as much. And again, silver had that big parabolic move last week. We're waiting for the high to be put in. It did it on, at 11 p.m. on the 3rd. As you can see, we touched. And again, it was a long time here. If you held it over the weekend, again, a little bit riskier, but you could have came right back up into that same level. And then really since the 6th at about 10 o'clock at night, it's been nothing but straight down since that time, retracing back down again. So again, big move up, parabolic move back down. It just took it took a little while. And again, with it ending high, you were looking for shorts going into the weekend.
And I do think some of that has to do with the fact that U.S. traders were all pretty much offline yesterday.
Mm-hmm.
So, all right. Well, with that, one, I dropped in the link for 3 hours from now, and come back and join for the full blown session, and we'll have an opportunity to see where the U.S. trader is coming back online. Summer ending. How are we going to move into the fall? What are people thinking? We'll see some of that before we do the session at noon Eastern today. So please join us. If you haven't registered, you can click that link right there. Otherwise, any questions for Nadex, please email us, customer service at nadex.com. Any questions for Brian? You can reach Brian at support@keeptradingsimple.com. We're very accessible. Please reach out to us on email if you have any questions. And that was thanks for joining us this morning. I think that kind of covers really what's moving around. It was the pound euro. Oil certainly making a big move. Gold also making a move. Interesting that the commodities are where we're seeing it. And that is actually why we're doing our next boot camp on commodities. That is really what's been hot and what's been moving around in the markets in the morning. So we'll be covering that later this month in September. You'll probably be seeing that. Anyhow, please join us again in a few hours, and then otherwise we'll catch you tomorrow morning. Thanks everyone for joining, and good luck in the markets.